Alright, so amidst all the doom and gloom, there's one thing in particular that I want to talk to you about, which is something that Bitcoin has done 4 years ago. It's to do with the $3,000 bottom that Bitcoin formed in our previous big bear market cycle right here. And it's going to tie into how low Bitcoin might end up going in its chart right now. You know, you guys have heard me talking about this if you've been subscribed to the YouTube channel, but there are a few key levels of support that Bitcoin has below $20,000, and unfortunately, they really generally start quite low. They start a further, roughly about a further 30% drop from $20,000. You know, this first area of support being the $14,000 area, just in my opinion, according to my own analysis. Where's the chart where I drew all of these lines? I'm not sure where I've actually got these support levels drawn out, but anyway, I can just draw them out for you guys again. And so with our current chart, it is going to be roughly around that kind of 14K range, which is going to be this green line right here, stretching down to about 12. You know, this is the range that you guys have heard me talking about. And the reason I'm saying this is essentially because there's just not much trading that took place between this green box and these two green lines right here. And that generally means that, you know, when the price does enter these kind of ranges, the price can just shoot all the way up in one direction, right? So if it comes into this range from the bottom, moving in the upward direction, it can just absolutely rocket ship through the range. And, you know, the other big range that I was talking about, which behaved like this, was, of course, bear with me while I remove these lines, that other range was, you know, primarily kind of like 29,000 down to about 28,000, down to about $20,000. This was another big range. And these are ranges that I call low liquidity zones, right? That's what they are. This is what that essentially means is that there's just not much money that really moves around in the market, considering how big the range is. You know, this is a $10,000 range. If you look in the next $10,000 range, you're basically looking at everything kind of from 30K up to 40. There's a lot of liquidity. There's a lot of coins being exchanged in these kind of price ranges. It's not the same in this $10,000 gap right here. You know, generally the price just absolutely shoots up or absolutely drops like a stone. And that's very important, because if we end up seeing this kind of thing taking place, then essentially we're looking at big waterfall drops into areas of support. It's no surprise that we're starting to find support right now, ladies and gents. Bitcoin up to 21.7 from a low today of $20,079. Okay, so that is no coincidence whatsoever as far as I'm concerned. You know, that is something very important. But the issue here is that if we drop again, we could be looking at a similar situation taking place. Because again, within this gap, it's been the same picture. You know, generally, because there's been, you know, over here, basically no trading between $20,000 and $30,000, we couldn't expect any support on the way down. This is like the main thing I've kept saying on this YouTube channel. Make sure you're subscribed if you don't know what I'm talking about right now, because you will have missed some very important content. It's very similar right here. Again, just straight up. Look at this, guys. Straight up in a straight line, straight back down, nearly straight up, and then straight back down. I mean, we're just not spending much time trading in this range. And so naturally, we have to look for where the reversals start happening. You know, we have to look for where some of the support hits start coming in. And that's why this kind of $12,000 to $14,000 range is what I'm going to be looking at. And the reason that this is important is if we look back at what happened with our $3,000 range right here, we had two of these, you know, Crypto Kirby calls them trapdoor kind of situations here, right? So the first one that we had was at $6,000 here, where we knew that, and actually what I'm going to do here is I'm going to take this onto the BLX chart, and I'm going to go ahead and replay the chart, okay? Because I wanna have some clean drawings right here so that I don't confuse anybody. And this is literally, I mean, this is the chart that we were working with back here, back in the day in 2018 when Bitcoin had essentially stabilized at the $6,000 level. We had this kind of like, you know, relatively thin green box of support. I mean, we could stretch it out to accommodate these little moves right here, but for the most part, this was our support area. And we knew that, you know, again, with the same thing, I mean, if you guys were watching the YouTube channel back then, we've been around for a really long time in this crypto space. I'm so proud to say it, that we've consistently been performing well throughout all of this time. It is one of my proudest achievements in life. If you want to see how we've been able to achieve that, check it out. That was a horrible click. Check it out with the link in the description, but down below, the first link, that's going to take you to our free Telegram channel where you can inquire about VIP. Join for 50% off our big one of our biggest discounts ever. Right here, you can see quite clearly that with the exception of this little trading range right here, there really wasn't much trading that took place for Bitcoin between this high right here at $3,000 and, you know, this high at $6,000 right here. Let's just put another line there. There wasn't really much trading that took place between these two green lines. Really, all we did was we took one leg up, we took one leg all the way down, and then the next leg just straight shot up to 6,000. So again, you know, where it would be a little bit more hazy, where there would be a little bit more room for interpretation that actually perhaps, you know, this market might find support on the way down, it would have been if we had more sideways consolidation. It would have been if we had, you know, perhaps a second rejection at, you know, this $4,900 level. You know, that would cement the 4.9k area a little bit more. But because we didn't have any of that, we had to expect a big crash down, you know, and the first target would have just naturally been this kind of reversal point anyway at $5,000. That's exactly where the trend paused. I'll show you that right now. Let's wait for this to load up. Bam, right here. Take a look at this. The trend started to pause. It bottomed out right here temporarily, just a little bit higher actually than $5,000. It bottomed out at 5.2. This was a 7-day pause, and then the capitulation just carried on until pretty much we hit that next area of support. Wait for it. There it is. Yeah, that's the area of support. We didn't actually get low enough because people were front running the market. It's very interesting to see this stuff happen, right? Obviously, the main level of support was $3,000. We didn't hit $3,000. We actually came in a little bit higher than $3,000 because we topped out at, we bottomed out at $3,150 because people were front running the market. A lot of people knew that $3,000 would be an interesting buy, so you had people layering their buys on top. You know, if I know that you're going to buy at 3,000 and I know that a million of you guys are going to buy at 3,000, well, I might want to preemptively strike and buy at 3,010. And, you know, you might know that, so you might buy at 3,020, and that's why we get these, you know, front-running situations. Now, that's all well and good. That basically brings us up to where we are right now. But how this relates to the to the $14,000 range is that if we lost this area of support, we would then probably be dropping to the next major area on the chart, and I can only put it down as being over here. The reason I'm saying that is if we look back at this price level historically, and this is where, if you guys were in the space back then, I'm so curious how many of you were, 𝗪𝗏 was calling for potentially a $1,700 Bitcoin. And he had correctly predicted, you know, there was this really funny song, Bitcoin, please go to moon. Something like that, and then 𝗪𝗏𝗧𝗖𝗜𝗓, we going down to 1k, something like that. It was fucking hilarious. If you guys were in the space, I need to know. I need to know in the comments. Just let me know. Smash up the likes as well if you were here back then. Crypto was different back then. Crypto was way more degenerate back then. But I miss it. It's not the same anymore with all these big players with their big bank accounts coming into space and making it boring. It's not the same anymore. But anyway, the reason 𝗪𝗏𝗧𝗖𝗜𝗓 was saying price levels like that was because technically that these were the only areas of support. The price had risen so quickly that it didn't manage to establish resistance on the way up, and so we couldn't expect support on the way down. I've said this like a million times in the last few weeks. And so naturally, you've got, you know, I mean, below 3,000, only 1,800 as a, and we're being very generous by saying that this is a support area. It doesn't actually necessarily deserve to be. It resulted in the market topping out for a grand total of 7 days, and that's after it's already pulled off a 100% rally. It's doubled in price. And it only consolidated for 7 days before continuing trading higher. You know, and so that's how we painted it as resistance, and to use it as support, there was just this one quick wick down, and that was it. I mean, it's just not. It's not like, you know, if you compare it to support levels that we have now, like, look, this $6,000 area of support, this is real support, right? This was resistance, then it was support again, and again, and again, and again, and again, and again, and so on. You know, this is a well-tested, real, genuinely strong area on the market. You just can't say the same about a line like this, which is why the price predictions start going very low. Like perhaps, you know, 1.3 was another prediction that 𝗪𝗏𝗧𝗖𝗜𝗓 was putting out. I might have misquoted him on 1.7. He might have actually said 1.3. But in any case, like very, very low predictions. And the reason I'm bringing all of this up is that, you know, when we have these, basically these trapdoors breaking, you know, especially because it's Bitcoin and Bitcoin rises so fast, you really are genuinely looking, generally, I think anyway, looking at ranges like this, where, you know, if you collapse below one level, you're gonna probably fall down to the next one. If you collapse below that one, you're gonna probably fall down to the next one. But that didn't happen. You see, in this 2018 bear market, we collapsed down to the 6K area. So in our case today, this area represents the $30,000 range, and then, you know, we've now collapsed down to the 20K area, or in this case, the 3K area, and the next corresponding. And I'll actually, instead of trying to get you guys to visualize this, I'm actually going to do it for you, so that you know exactly what I'm talking about. Let me just turn my camera off real quick so that you can see my whole screen. Is this positioned well? Let me just make sure we're good. So take a look at this right here. This chart, put it onto the logarithmic scale, and all I want to do is again just draw another line here, another line here, and at 12. And then yeah, we'll put the 6K level here as well, just for visualization, right? So you can see, I mean, this is pretty clear. You know, we had this one floor right here at $30,000. Move this up over here. You know, this $30,000 area kind of corresponding with the 6K area. We then drop down into the 3K area, which kind of potentially corresponds with our 20K area right here. And then, you know, if we fall below this again, I mean, you've watched the first few minutes of this video, so you know why. You know, if we lose 20K, it's quite likely that we'll just instantly just drop like a rock down to, you know, 12, 14. You know, well, that would potentially be, you know, somewhat akin to Bitcoin continuing this downtrend on this occasion here, which it didn't do, of course. If we play the chart forward now, the chart doesn't want to replay. There we go. You'll see that we actually never traded down this low ever again in Bitcoin's price, in Bitcoin's history. And then we actually set a new higher low at 3,300. So again, this was people just actually trying to front run the market. Those of you who remember this little pump right here, you know I'm never going to stop flexing this one. I literally went long on Bitcoin the day before this happened, which was one of the most impressive trades I ever pulled off in my life. Even still to date, because to be in a range like this where everyone's really miserable and depressed and go long one day before this big fuck off candle comes in, that's impressive. That was that was really, really cool. We did actually outperform this performance last year in the bull market, but that was still cool, because you got to bear in mind, like, how old was I here? I was like 18 years old, maybe not even. I was 17 years old, I think. I was young. You know, so that was cool. That was very, very cool. But yeah, it would be like collapsing below the next basically trapdoor here if we fall down to 12 to 14. And so, you know, I mean, the question falls on you. I mean, you know, there's a few factors here that don't make this an easy question to answer. You know, one of the things is, well, you know, I mean, before it didn't happen. You know, we didn't need to fall below that next trapdoor right here down to, you know, 1.8 or potentially even 1.3. We just didn't need to do anything like that. And by the way, I really this is probably the single best nugget of wisdom I'm going to give you in this video, and this is the most important thing I think I've said, that I think I will say for a long time, is that, you know, you guys as traders and analysts, you need to, if you want to trade in some substantially successful way, you need to visualize the market not like a normal human with emotions, you know, and the best way to separate this is you visualize the market in terms of levels, not prices, but levels. And so, you know, for me, the way I see the market, and hopefully, you know, this is developing for you guys. It's definitely been the case for so many of our VIP members that I've gone through the _FLYS Academy courses that I've recorded completely on my own. It's just me teaching the content, you know, teaching everything I know about trading from A to Z. I mean, this is what we build traders into. It is phenomenal. I mean, it's on a totally different wavelength to what most other traders have ever experienced. You know, is looking at the market in terms of levels, right? So I'm only interested in you know, if we lose 3, we're down to 1.8. If we lose 1.8, we're down to 1.3 kind of thing, because there's no reason to expect support in between these kind of ranges, right? And so, you know, we bring this to our more immediate market right now, and yeah, it's fairly safe to say, in my opinion, that if we lose 20, we're down to 14. If we lose 14, we're down to 12. If we lose 12, we're down to, you know, the next area, which is going to be about, you know, in my opinion, perhaps 10. You know, something a little bit like that. Hopefully you guys are getting the picture now. Let me just drop a line right here. You know, hopefully you guys are getting the picture now, that, you know, it's in terms of, like, it doesn't matter what the number says, right? It doesn't matter if the number says 1800 right here, or if the number says 69,000 all the way up here. It just doesn't matter. It's all about the levels, right? I mean, the fact that there are big, like, there are big, like, moves in the price, like there are big things actually happening in the price, is only a bonus. It's only a good thing that you know, that means that you can make money. But you know, as somebody that's just looking at the market, and obviously, you know, generally going to be aiming to stay as objective as possible, and so on and so forth, you know, the single best way to achieve that, in my opinion, is going to be by looking at the market only in terms of levels. You know, it doesn't matter if between this level and this level is a $6,000 gap, or if between this level and this level is a $10,000 gap. It doesn't matter. It's you know, that the market is still going to move in these ranges. It's such an important thing to be able to understand, because once you do get that, you're going to completely detach the numbers from your emotions. You know, like if the price goes from 30 down to 20, you're not going to care. You know, I mean, I was talking to friends about this crash. This is real talk right now. Where's my camera at? Let me blow this camera up real quick. I was talking to friends. I'm sorry, everything's so messy, by the way. This is actually kind of embarrassing. But yeah, I was talking to friends about what's going on in the market, and, you know, the recurring theme that I heard my friends saying to me is, you know, like, I can't believe that you're so calm about it. You know, I mean, I'm laughing about it, and I'm just having a good time. I'm fucking about, and you know, I told them, like, the recurring answer that I was giving these friends is, look, like, we had prepared for this. You know, I mean, this move isn't something that took us by surprise. This is quite straightforward, basic analysis at the end of the day. If you lose one area of support, you probably fall down to the next one, which is exactly what we've done at the end of the day. It is. Am I wrong? Like, this is exactly what we've done. We've fallen from 30 down to 20. That's standard procedure, mate. That's what happens when you lose support. And if you view the market like that, then yeah, I mean, look, no one likes, you know, losing 30% of their money in a week. Like, shit, like, I got hit on this, I lost money. But at the end of the day, it's not, you know, first of all, I can remind myself that this can just as easily pump up to 30, because there's no resistance. There was no support on the way down, so there's no resistance on the way up, right? I mean, it apply. You guys who've been watching me for a while are going to know this quite well. You know, when the market's going up, you know, I'm quite happy saying it's going up too quickly, and that, you know, it needs to retrace, or something very bad is going to happen. But it's the same thing if the market is going down too quickly. It just doesn't sustain. You know, you've heard me being impartial about this, whether the market's going up or down. This is what the YouTube channel is about. We're keeping it super real with you guys. We're keeping it very, very real with you guys, and that, you know, to me is a very important thing to be able to keep in mind. You know, I mean, when you visualize the market in these ways, when you're looking at the market in these ways, you know, you're not going to be caught off guard by moves like this. You can't be hurt by them. You can't be upset by them, because I mean, it's as simple as knowing that, I mean, I don't know, if I drop this water bottle, it's gonna land on my table. I mean, it's like understanding gravity. You know, you just accept it. You know, I mean, nobody's gonna be mourning over. You know, I mean, if you jump off a table and hurt your leg, I mean, it's gonna hurt, but it's not gonna be a surprise pain. You know what I mean? And that's how I encourage people to view markets. Is that exact line of thought. You know, if that kind of thing appeals to you, if that really stood out to you, and you thought that resonates, or that you would like to learn more things like this, this is the level of detail and depth that we go into with this 𝗧𝗢𝗥𝗙𝗦𝗧 Academy course, which you're going to get for free. when you join VIP. Most of the time, most people who join will, depending on which plan you take, and we'll tell you all about them when you follow these steps on screen right here. This is the only way to join. Don't bother searching my name on any social media or Telegram or whatever, because there's so many scammers. Just use the links in my description. It's the first link down below. Like I said, it's 50% off. Once you click on this link, it's going to take you to this screen. Click on my name, and then click on send message. That's it. That is literally it. It's less than 30 seconds. There's no downloads required. There's no signups required. This is a direct chat with me. You can ask me anything you like, and we can also, if I'm not available to respond, one of my team members will. So that's absolutely great. You know, and that's kind of the that's the deal I'm seeing with this market right now. I mean, you know, last time we didn't need to drop further. But you know, last time we weren't in a potential, you know, big bad recession. You know, really dangerous time in the economy. You know, it is somewhat, you know, unique of a time right now. I mean, the economy hasn't been this weak. It hasn't been this weak for more than 10 years, and it absolutely is showing many signs that it won't recover. You know, I mean, I've started asking myself, like, what can make this recover? And short of government interference, which, you know, it seems like there's been too much of that at this point. You know, I mean, I mean, it's too far screwed up by, you know, for example, the U.S. government or most governments in the world, that you know, I mean, if they keep trying to interfere, I mean, it's just gonna make it. I mean, it's having no effect now. I mean, all the inflation over the last couple of years hasn't fixed the problems we were facing. It's actually just added more problems on top, right? So that's a great example of how, you know, this interference actually isn't helping. And so, you know, I start thinking about what can actually take us out of this. I don't know. I don't. And so when I consider stuff like that, yeah, you know, I mean, potentially we do end up seeing that next kind of trapdoor drop down to the next level. And again, it doesn't matter, because, you know, we're most likely going to drop down pretty quickly, and so we're most likely going to have basically no resistance again on the way up. And again, well, yeah, 30 to 60, this is quite a range. This is where I think, you know, we could expect a lot of resistance, but this is the battlefield. This is essentially the front line, and to get back up to the front line, I don't think it's going to be difficult. It might take some time, but I don't think it's going to be difficult. And you know, we need to be real. I mean, we are on quite an extreme emotional swing right now. We are on quite an extreme emotional swing right now. I don't think people are aware of this as much as this is the case. You know, I mean, to be at a reading of 7, to be at a reading of 8, you know, I mean, this is quite something. You know, if you start feeling like it's time to give up and all these other kind of things, you know, I mean, that's cool. I can totally understand why, but let's remind ourselves where we are. You know, we're at a support level. You know, I mean, it's been heinous, ridiculous, continued sell-off. I mean, absolutely, you know, things that I've never seen before in terms of, you know, just the consistency of this dump. You know, it just can't. You know, things don't last forever like this, and that's a big point that I just want to make sure that we're remembering while we're all getting very, very scared. You know, I'm not saying that we're going to stop dropping down. I think it's very possible that we do fall below 20, perhaps down to 14 or whatever. But relief, bro. We're gonna, you know, come on, let's be serious. We're gonna get some relief. It's gonna come. It always does. It always does. You know, nobody thought it would come on this move. I was saying it would. And look at that. It did. It did come. We traded it. We made some money on that. A really, really nice profit, actually. I pulled a huge, nearly 200% profit, very close to, well, just over, actually, for part of my position, 200% profit on Ethereum. And then I sold all of my Ethereum as well. That was right at this peak over here before everything really went to shit. That's when I sold all of my Ethereum. Very, very happy with that decision. Indeed. And by the way, Ethereum is basically the only altcoin I hold. The rest of my holdings are very small, minimal. I don't really notice them, and so I'm pretty much just a Bitcoin and Ethereum boy, to be honest, guys. And I'm super happy with that at a time like this. So that's all good. So yeah, guys, that's what I'm seeing right there. I'm probably going to be doing another live stream later on today. And so if you do want to catch that, make sure you are hitting up the like button and that you are subscribed to this YouTube channel. If you want to be trading on the same platform I'm using, then check out the link to Bybit in the description down below. You're going to be getting some extra cash for free deposited into your account when you sign up using my link and make your first deposit on Bybit. So it's a super quick process to sign up. It can literally take less than 30 seconds. It kind of depends on your typing speed, but there's not much in the sign up process whatsoever. And when you do sign up using that link, once again, you get free money deposited into your account, which you can do whatever you like with after you make your first deposit on Bybit. So definitely check that out if you want to get some free money, and if you want to be able to see how we're trading behind myself and my team behind the scenes inside of 𝗓𝗡ly's VIP, then the only way to join is by joining our free Telegram channel. First of all, this is where, again, you get more free analysis from myself and my team around the clock, and then clicking on my name at the bottom of any post inside of 𝗓𝗡ly's Gold, and then send message to ask me how to join. That's it. Very quick, painless process. We'll get back to you super shortly, and we'll get you in. All right, hope you've enjoyed this one. You know what to do. Hit up the likes, subscribe, tick the bell, and I'll see you all in the next one. Bye-bye.